What's going on, Cade? How are you doing today, bro?
I'm good, brother. How are you?
I'm doing good, man. Great, fantastic meeting last week. Lots of cool people. Definitely worth it. If you missed out, you really did miss out. And I think that there's just a lot of benefits that we have to offer. Lots of cool people, people from all over. I think we had the most diverse group of people in terms of it wasn't hyper real estate focused. It did branch out into, we had this couple that made coffee that was there. So,
Yeah,
which
yeah, Brian.
super awesome people.
Yeah, super sick, super exciting. And I know that you and I both talked about there was a lot of people there that couldn't make it. So just really exciting to get, tapped into a network of individuals and owners and business people who are out doing things, moving and shaking in the community. So definitely recommend, people show up to the next one, put it on their calendars as early as possible. It's the first day of May. So if you guys can make it, make sure to put it on your calendar. Drew, what is the date for the next one?
May 26th from 5:30 to 8:30 at the same. So last Friday of the month, May 26th.
Awesome, dude. Well, I know that you have some big news.
Yes, sir. Yes, sir.
So why don't you hit on it for us?
Absolutely. Yes. So, for those of you guys who haven't heard, we actually did just hit. It happened on Sunday, but it actually went through today. There was a third bank failure that was subsidized by the US government and then sold off to JP Morgan. Very similar to the whole FVB situation. It was a lot of higher upper echelon type individuals who had lots of money stashed within the bank. Bank was First Republic, if I didn't say that already. And essentially, what happened is once the whole SVB thing happened, which SVB again, I want to kind of touch on Silicon Valley Bank was more towards the business side. They catered a lot to tech startups and firms in Silicon Valley, and with the economy the way that it was, that triggered that slow decline. That obviously, and then with treasuries and interest rates being very low and them not really returning a lot of money on their the assets that they had within, as well as making somewhat risky lending decisions, that's what led to their demise. So they took money that they had within their reserves, they were not getting much of a return on their investment, so the money wasn't growing very much, and then they were making ultra risky lending moves, which defaulted a lot of times. And so all of that led to the demise of Silicon Valley Bank. Well, that direct domino effect affected First Republic because once Silicon Valley Bank and the other big Titan started having all of those issues, people all around the United States started running to their banks and getting money out, and then putting it elsewhere, right? Because you have what's called FDIC insurance, and FDIC insurance covers up to $250,000 per social security number per bank. So you can't open like several accounts and have 250 plus 250 plus 250. It doesn't matter. It's per social. And so people were taking money and opening different accounts and trying to leverage and max out their FDIC insurance because they wanted to have access to more money protected because they saw things like this start to happen. And because First Republic was really not diversified and hyper focused on that target market of the upper echelon, when they had a bunch of people, about 2/3 of their assets get pulled from the bank to be placed elsewhere, it just led to the stock price fumble and plummet, and then ultimately that led to them not having enough money to pull out. They kind of ran into the similar problem that SBB did, and now here we are today. And then the government subsidized, seized it, and sold it over to JP Morgan, about 97%. So that's the big news. You'll probably hear a lot about First Republic. You'll hear a lot about what's going on in that. And people are going to take their spin and say, oh, the economy's crashing, and, the world. That's not the case. It's not fear time yet. It's something to be educated on. So your call to action is to just don't fear, don't panic. Panic leads to chaos, and chaos
Yeah.
leads to anarchy, and anarchy leads to no government, which leads to lots of different problems. And that's a huge rabbit hole we don't want to run down. But we don't need chaos. Just be educated, be understanding, know what's going on, and consult a professional in the banking area to really give you some insight in terms of, where your money is, where it should be. But I don't think this is a macro problem. I think it's just a consumer or a business segmented problem. Like if there are banks that are specifically focused on that upper echelon type individuals, maybe you would be worried about them not making it through. But your average, especially the big three, JP Morgan, Wells Fargo, and Bank of America, you're not really going to be too susceptible to this type. I mean, JP Morgan just bought this bank. So if that goes to show the strength of the bank, they're pretty good.
Oh, it's
So,
crazy. Yeah, dude, I was
yeah.
just gonna say it's crazy how fear can drive people to do insanely irrational things. Think about it. SVB, now First Republic, right? All these
Mhm.
people fearing about, holy crap, the banking system, holy crap, the banking system. And it makes them do these irrational things like pull out money. And then that's actually what causes this stuff to go to crap. It's not the fact that they were just doing their thing, running a business. It's the fact that these people got all scared and started pulling money out, right? Creates, stock prices plummet, and there you go. So yeah,
Absolutely.
it's just, for the average day consumer, people who are investing, it's amazing to me when you listen to people like Dave Ramsey, whether you like him or not, Warren Buffett, right? People like this who just made stupid money, right? There's one thing to do. It's just invest the same
And
amount
hold.
and hold a little bit at a time and invest, and hold. And it's just so boring. You can almost fall asleep. You know what I mean? But the idea is still the same, like the tortoise and the hare, where the tortoise will win at the end, but it's just one step at a time, super slow, nothing crazy. You know what I mean? And there's a lot of truth to all that. So, Drew, what would be your biggest, other than what you already mentioned, so that, we're not going into some crazy meltdown? What would be your biggest piece of advice for people watching to take home, understanding, oh my gosh, there's like 3 bank failures. There is something to say about these banks failing, right? What would you say to those people to, set themselves up and their families up successfully, and to just be protected overall?
Absolutely. Yeah. So I think, there's a few different things I would do. Like, stay true to your plan. Don't make any emotional and irrational decisions. I preach this while I'm giving my client appointments. Too many people make decisions based on emotion, not based on math, logic, and reason. And so shifting that mindset of making sure you're focusing entirely on making those decisions in that math, logic, and reason area of your life is super beneficial. So focusing on that, hitting on those points. Secondly, just, and again, following your plan. Secondly, don't freak out. Don't feed too much in the media. You're going to read everywhere that this is the second largest US bank failure in history, because that might be a true statistic, but that's the media invoking fear in you to make a change, and probably an unnecessary change. So again, stay true to yourself, stay true to the plan, and consult a professional if you have fear. Do some research. I mean, do some research on your banks. I have banking with PNC, with Chase, with Wells Fargo, and with Hughes Federal Credit Union, who's here locally. And I'm not worried about any of those banks going anywhere, because they're all privately funded, or they're funded by, the shareholders, and they're ran well. There's something to be said about a business that's run well, a bank that's run well.
And Drew, and what else? You don't have 250, you don't have above $250,000 in any of those banks. So even if it did
It's
crap,
true.
you're fine.
I'd be fine. I'd be fine. Exactly. Exactly. And that's true for most people, especially most of our viewers as well. Like, if you have less than $250,000 in a bank account, you are a-okay. Because, I mean, unless you have multiple bank accounts within the same bank and you're above that, then okay, maybe start to do that. But you're, again, when you have that kind of money, that's when you start meeting professionals like me or other financial advisors to kind of guide you through that, because there's things you should know, things that you can be doing better, differently. So yeah,
Right.
all in all, call to action, just follow your plan.
I
Just
love
keep
it.
going, keep doing what you're doing. And if you have questions, consult a professional.
I love it. Yeah. And I think too, to bring it kind of into a real estate aspect, there are a ton of investors right now who are going to be screwed over the next couple of years And I'm more so talking about kind of the multifamily sector, specifically in big cities, right? Texas, like Dallas, Houston, Fort Worth, Phoenix, Arizona, even Tucson, right? Because I'm in this space, I hear the stories of how much some of these investors are paying, and they are over leveraging their debt. Now, I don't know exactly how these banks, lend out their money, but I do know they're over leveraged. If they weren't over leveraged, they wouldn't fail, right? And
Hmm.
so come to the realization that as you are a normal consumer and you're investing your money, whether it be real estate, stocks, whatever it is, okay, do not over leverage. Do not make stupid, unwise decisions that could lead to a massive failure like this, right? A lot of multifamily investors have over leveraged and they have bought these assets for way too much money than they could actually make off the property. And so, come when their balloons and their notes are due, they are screwed. They are absolutely
Hmm.
screwed. So, make sure that whatever you're doing, just like Drew said, follow the plan first and foremost, but seek counsel. That is biblical. Seek counsel, right? Of
Absolutely.
many advisors, and you are gonna make good decisions. Okay. So yeah, I think that's absolutely the right thing to do is just seek mentorship, follow the plan, and understand that it's a long journey. It's boring, but you will get there, Um, and ultimately, the idea that I'm going to be putting more than $250,000 to just sit in a bank account, you're probably doing something wrong anyway. You know what I mean? Like, I don't know, and maybe I'm just not that level of wealth, but to just put, multiple six figures in a bank account, I think that just sounds crazy to me in general. So, it makes sense as to why the FDIC capped it kind of at that number. Cause I think really, I mean, to me, that's just a crazy number. I'd rather put that into a real estate deal or, into stocks or buy some land or something, right? I wouldn't just
Absolutely.
park it in a bank, but that's just me. So, just make wise decisions and seek counsel.
Absolutely. And hey, to hit on the other thing too, I want to point out two major things as well, right? Is the banking industry is not going anywhere. And I don't know if I said this earlier, but JP Morgan just bought First Republic. So clearly that shows the strength of JP Morgan, right? And then even a company that I work for, New York Life, right? Our surplus is $33 billion upwards. What that means is that if every single policyholder that has a life insurance policy with us died tomorrow, and every single annuitant that had a beneficiary that the money would go to post death, if we paid out all of that, New York Life would still have $33 billion in the bank. So it just goes to show that, like, we have this massive surplus. We're a very strong financial company. These companies exist, and the banking is not going anywhere. So just, I mean, if that gives you comfort, there's always going to be bad news, but let's talk about the good news as well. So
Absolutely. Yeah, that is
sweet.
good, brother.
Well, do you want to hit on the Sarita market real quick? Give an update as to where that's at, and
Yeah, yeah. I'll jump on it real
cool.
quick. So obviously, we're starting a new month, so this gives us some good, strong data for the previous month. So again, I'm going to go over Saudita, Arizona. The median sales price in April 2023 was $349,900. Okay, so we're right under 350. Take note that in March it was 345. So we've gone up 5 grand in just a month. Okay,
Wow.
median sales price. So that's pretty big. Days on market has gone from what was in March 2023 15, April 2023 was 19. Okay, so 4 days on average. So again, we're definitely seeing a lull, and that is something that I've mentioned not only here but in other videos on my channel, that Q1 of 2023 was definitely regaining normalcy in the real estate market, not just locally here in Saudita, but as a nation as a whole. Okay. And a lot of markets were seeing substantially more days on market and price reductions. Saudita is still relatively super hot. So again, 19 days on average. And then for month supply, we have 2.3. So we went from 2.2 in March to 2.3. Again, month supply, all that means is that if all the current homes on the market were selling at the rate that they're currently selling at today, how long would it take for them to completely sell out? Again, 2.3 months. So that tells us that, it's definitely slowing. We're seeing a sharp increase. However, we are still not in the summer months. And so personally, we have been seeing, more day-to-day stuff rather than looking at last month. We are seeing more offers with less concessions now. I know that for one of the lenders we partner up with, their team is not even bringing up concessions right now in their buyer consultations because it's just not as popular right now. So we're still seeing sellers, right? It's only 19 days here in Saudita. 2 weeks that's still crazy hot. Okay.
Yeah.
So sellers are still having this upper hand right now to where they kind of get the hearsay. So as we head into the summer months, I only think that is going to, maintain, because when you look at the homes for sale, we're only up 5 homes for sale since March. So in March 2023, there was 147 in Saudita. Right now, April 2023, there's 153 in Saudita as a whole. That's not enough. It's not enough at all. So again, there's just not enough supply for the demand that's there. So just kind of be aware that, concessions are on their way out. We had a little bit in Q1 where most buyers were getting concessions, and now that's not seeming to be the case as much. So just kind of keep that in mind moving forward.
Perfect. Yeah, I think that's super duper helpful to know. Super duper, the market's fluctuating because for a while there was, people were talking about seller concessions and getting that in. And so now we're seeing that sort of shift and that change in the market again, right? I understood that correctly.
Yeah. Yeah.
So
Yeah, something I want to iterate is that in April, right? April data is what I'm reading off to you, but what I'm telling you is that the day-to-day stuff that we're seeing right now is alluding to the fact that this summer month is going to be heating up here quickly. And again,
gotcha.
that April data is showing that still a little bit of a lull and a little bit of a slowdown, but a lot of that is due to the fact that there's no homes on the market, right? So this is Saudita as a whole. I know Rancho Saudita specifically only has about 38 to 40 homes active for sale right now. And that's not including new construction. So that's just resale homes. But, that's out of 6,000 to 7,000 homes just in Rancho Saudita. So there's just not anything there for people to be able to buy, So as soon as stuff comes on, it's leaving and it's getting interest pretty quickly. So it's still very hot. People are still concerned about rates and pricing, but the reality is people are still buying it. So you can complain all you want, but the data is showing. I mean, I'm telling you, this is firsthand what I'm dealing with every day. There are people coming in with cash. There are well-qualified buyers who are willing to pay the listing price. And so it'll be interesting to see what the summer holds. I mean, it's still really hot right now, so we'll see how it turns out.
Love that. I love that. Well, sweet. Well, awesome, man. Do you want to, you got a quote? You want to finish us off on a quote here?
Oh man, put me on the spot. I did not have a quote ready. What I can say, I'll do a little business mindset quote. I was having breakfast today with a business owner here in town, very successful, and he is starting a new division in his company. And I said, what's the first step in starting your new division? And he said, what is the cost of acquiring a lead? That is the first thing you have to figure out. And it totally shifted my mindset of how I look at my prospecting, how I look at my marketing. What is the actual cost that I have to pay to acquire that lead to then be able to sell them, right? Because it's one thing to get a lead, it's another thing to sell them. So just keep in mind, if you are in business, you're a business owner, understand first and foremost over anything, what is the cost to acquire a lead? That's more than a tip than a quote.
I love that, but it's actionable. It's good. I love that. So any of you guys looking out there to maybe, extend out into a new business venture, or even thinking or considering adding on to your current business venture as a service of products that you have to offer, definitely that's a really good place to start. is just what's the cost to get a lead and what's the cost to see that project through, maybe, and then adding those
Yep.
two numbers up together to see what you could charge and is it a viable business opportunity. So sweet,
Absolutely.
man. Well, dude, thank you so much. Again, our next meetup is May 26th from 5:30 to 8:30 at the Sands. I'm really looking forward to it, and we might have a little bit of a shift in the agenda for that. We're still kind of figuring all of that out, but more news on that to come. But until next week, Kate, I hope you have a great one, and we'll talk soon.
You too, brother. Talk soon.